looking out for is the University of Michigan consumer inflation expectations. Now, some analysts prefer the inflation expectations on the 1 and 5 year from consumers because consumers are seen to be more responsive to rising inflation and are more nimble, will change expenditure habits much more quickly than businesses who may be making projections 12 months plus in advance, sometimes confirming spending for the following year. Not so with consumers, they're much more responsive. So that's why Feds Williams said on Tuesday, the 4th of March, look at the University of Michigan inflation expectations. This was got people worried. The 1 year, 4.3%. What a surge. 12-month high, right? Look at the 5 year, 3.5%. Wow. Word of warning here, I noticed that on the respondents of the surveys, there was a big split between Republican and Democrats. So Republicans, the Trump party, well, they were like, we don't see much inflation coming. Obviously, Trump's in the White House and is the president. Democrats saw very high inflation. So that political split tells me there's quite a skew there in terms of politics. But nevertheless, look at these on Friday. There is a high probability that there will be a big reaction if these keep rising higher. If they start falling back lower, then expect a strong reaction then as well. Particularly the bottom line, the
geopolitical front.
The way to analyze this is higher than expected print. That means inflation is more of a problem. That should be negative for stocks. Lower than expected print. That should mean the Fed have permission to cut rates more quickly, and that should be supportive for stocks. Geopolitical risk will have to be factored in depending on what's going on at the time. However, that's the broad outlook ahead of the event.